If you're looking for a stock to add to your portfolio that has a great combination between dividend yield, paying a high dividend yield, but also being able to grow that dividend very quickly, then this video is for you, because I'm going to talk about Altria Corporation, which is a dividend king. Now, this marks the very first video in the Dividend Kings YouTube series. I'm going to link somewhere here on this corner to the playlist of the Dividend Kings, where I'm going to analyze every single one of the 28 American Dividend Kings. I'm gonna do a video like this for every single one. So if you're interested in that, make sure to subscribe to my channel. Make sure to give this video a nice thumbs up to let me know that you like these kinds of videos. Before we get started, if you don't know what a Dividend King is, it's a company that has a dividend growth streak of at least 50 years. That means that they have been increasing their dividends every single year for 50 years straight. No pauses, no cuts in between, 50 years. Needless to say, that's a very select list of stocks. That's why there's only 28 stocks in the American market that are Dividend Kings. And Altria, ticker symbol MO, is one of them. Now, this video is going to be another deep dive into the stock, and this is how it's going to work. I'm first going to tell you what the company does, how they make their money, what you need to know about the company before even considering investing in that stock. Then I'm going to tell you about their past performance, both in terms of earnings, which is probably the most vital thing about any stock, but also their dividends, whether the dividends keep growing or they're shrinking, right? All those things are very important to know beforehand. Then we're going to cover the financials of the company, how strong, how robust they are as a business, because you only want to invest in high quality businesses. Then we're going to talk about what the fair price of a company, what the actual inherent theoretical value of this stock should be, and also what kind of returns you should expect if you buy this stock, at least at the time that I'm recording this video. And then finally, we're gonna close the video with my personal thoughts. If you are at all interested in what I think, whether I own the stock, the pros, the cons, the challenges in the industry, all of that good stuff will be right at the end of the video. So to get a full picture of the stock, make sure you watch the whole video. There will be timestamps in the description of the video, so if you want to jump to any particular point, just scroll and click on whatever section you're most interested in. So without further ado, let's get stuck in what Altria actually does to make money. This is a little bit controversial because it makes tobacco, okay? In my opinion, tobacco is not really something that adds really any value to society. Normally, I would recommend that you invest in things that are necessary to society and that will always be needed. Tobacco isn't necessary, but I'm pretty sure people will probably always smoke, at least to some extent. Now, Altria has not existed as such for its entire history. It was actually called Philip Morris USA, but it then had a little bit of a reshuffling. It kind of spun off Kraft, which it actually used to own, and also Philip Morris. And if we actually have a look at their corporate website, you can see that it actually owns Marlboro. I can't even pronounce that. I don't smoke, by the way. So cigarettes is the main money driver that Altria has at the moment. However, recently, Altria has actually been expanding because it knows that the sales of cigarettes, the sales of, people smoke less, the more years go by. People are way more conscious about the negative effects of tobacco. That's why they're expanding, and I really like that. So in recent years, they've actually purchased a large share of Kronos Group, which is an emerging global cannabinoid company, Michelle Wine Estates, and also a very well-known company called AB InBev. If you don't know who they are, they basically own a tremendous amount of beer brands. I mean, take a look at this. They've got Beck's, Budweiser, Corona, a ton of different brands of beers. I've personally tried at least half of these. But the main takeaway point of the tobacco industry is that, yeah, sales are decreasing. People smoke less. However, because of the nature of tobacco, it's an addictive thing. And again, this is a little bit controversial. I don't normally invest in tobacco. However, that means that people will always need to buy tobacco. And that also means that the brand power and the staying power of the products is very strong. And also Altria can actually keep increasing the cost of tobacco and people will still keep paying it. That's why the revenues have actually grown slightly over the last few years, not by a lot. However, what's pretty spectacular is what they've been able to do with that revenue, converting it into earnings. Earnings and revenue are related, but you can actually do a lot more things to make sure that your earnings per share keeps increasing every year, such as share buybacks or improving your margins, amongst many others. Take a look at this. This is Altria's earnings per share growth from the year 2010 to the year 2019. It definitely experienced some peaks, but overall it is increasing by an average of 8.5% per year, which is very good, by the way. For a company that's been around for that long, being able to consistently grow their earnings per share is really good. So earnings are when it all starts. A company needs to be able to increase its earnings in order to increase its dividend. A company that does not increase its earnings is going to have a very hard time increasing its dividend in the long run. However, in the case of Altria, have a look at their dividend growth. This is the last 20 years of dividend growth from the year 2000, where they paid just under $0.50, to the year 2019, where they pay over $3.2 per share of Altria stock. What's really impressive here is the consistently high dividend growth. Now, in my opinion, a dividend growth rate of around 6-7% is what I normally like to see. But when you see that this company has been increasing its dividend for an average of 9.8% per year for the last 20 years, that definitely catches my attention. Now, when I see this, and especially when I see that, the dividend growth rate actually seems to be accelerating, at least in the last 3 years. The last dividend increase has only been 5%, so it has definitely slowed down in the very last year. But when I see that level of dividend increase, you normally see this in a company with a 1%, 2%, maybe if you're lucky, a 3% dividend yield. But this is where it gets crazy, and this is why I said that Altria has such a great combination of yield and dividend growth. Altria's current dividend yield is an amazing 8.4%, and I don't have a lot of stocks in my portfolio that have such a high yield. But what's interesting is that Altria has actually been a company that normally pays quite a high dividend. Its 5-year average yield is 5.78%, and you can see that's kind of where it's been hovering around, at least for 2016, 2017, actually below 5%. But what's happened in recent years, definitely since 2018, is that its stock price has been going down. People are not as bullish on Altria. People don't like the stock very much anymore. And what happens when the price of a stock goes down is that its dividend goes up. They are inversely proportional, and that is what's happened to the dividend yield. It's actually shot up. And this has happened even before the pandemic happened. The dividend yield actually reached levels definitely above 6%, above 7%. And at the moment, you can get it for that ridiculous yield of 8.4%. Like I said, you don't see this very often. Very high yield, very good dividend growth rate, and also a dividend king, guys. I'm going to do a lot more videos about the dividend kings. Make sure you subscribe to my channel to be the first to be notified when I release a new Dividend Kings video. But you're not going to see this very often. This combination is not very common. That's why Altria is so interesting. Okay, now let's dig a little bit deeper. Let's have a look at the financials of the company and also some more key metrics that I like to look at just to ensure that the stocks that I'm buying are solid, that the company is solid, that it's not going to go out of business anytime soon. I like solid stocks in my portfolio. Now, the first thing that I like to look at is the earnings payout ratio. If you don't know what the payout ratio is, at least the earnings payout ratio, you simply get the dividends per year of the stock, you divide it by the earnings per share of that stock, and that gives you a percentage of earnings that are paid in dividends. The higher that number is, the more careful you have to be. Now, normally I like to see a payout ratio of around 60% or lower. That is a really good payout ratio. It means that the company has definitely got some wiggle room in case it makes less money. But in the case of Altria, the payout ratio has consistently stayed pretty high. The average over the last decade is a 72%, and over the last years, it's kind of hovered around an 80%. Now, I don't love this, but the company's management have repeatedly said that they are targeting a payout ratio of around 80%. That is what they're targeting, and they are confident with that. The company has been increasing its dividends for 50 years. It's a dividend king. They know what they're doing. So while I don't love this, and I definitely would tread a little bit carefully here, the payout ratio is at the level that the company wants it to be at. Now, the company has also been buying back its own shares, which is one of the ways that they can increase their earnings per share. if you have a look here, the outstanding shares have actually dropped by around 10% over the last 10 years, which is definitely a good sign. But the main highlights, in my opinion, about this stock, about Altria stock, is the amazing operating margin and also return on equity. Those two things kind of measure the efficiency of a company, how profitable they are. A company with low margins, it's going to be a lot more risky than a company with healthy margins. And in the case of Altria, if we first look at the return on equity and how it's fared over the last few years, it's consistently stayed very, very high. I normally look for stocks that have a minimum return on equity of 10%. That's the minimum. Anything above that is fantastic. And in the case of Altria, it's through the roof. It's consistently kept a very high return on equity, sometimes well over 100%. It's definitely true that ever since 2015, the return on equity has actually been decreasing, but still overall great return on equity. Now let's look at the operating margin of Altria. And just like with return on equity, I normally like to look for stocks with at least a 10% operating margin. And once again, Altria is through the roof in terms of its operating margin history. It's been consistently above 10%. It's actually been consistently at around 40%, and it just keeps increasing. The company keeps getting better at improving those operating margins. The average operating margin of Altria over the last 10 years has been 42%, which is wonderful. Those are definitely some of the highlights that I see when I look at Altria stock. Now let's look at the not such good highlights. One of them is the debt to equity ratio. I normally like to invest in companies that don't have too much debt, because debt is the killer of businesses. A company with too much debt, it's just taking so much risk. And in the case of Altria, again, I don't really love this. It has had quite a high level of debt consistently over the last few years. It seemed to decrease in the year 2016, 2017, but then they made those acquisitions that I covered earlier, and instead has shot up once again to quite an uncomfortable level of debt. I don't super love this, but it's a company that is experiencing some transformation. They have to adapt into a world where fewer and fewer people smoke cigarettes. That's why, they're taking more debt in order to fund acquisitions. I should also say that the Standard & Poor's credit rating for Altria is a BBB. That is definitely investing grade. It's not a great credit rating, but by any means, it's no Johnson & Johnson, but it's definitely at an adequate level. It's good enough, but anything below BBB, I like to be very careful. So hopefully that gives you a bit of an idea of the company's financials, their financial position, definitely some pros and some cons in there. Now, what I want to cover is the fair price that, in my opinion, Altria should have. What kind of level should you perhaps consider buying this stock at? Before I go any further, a quick disclaimer, this is not investing advice. Don't just go out there and buy Altria because I say so. I'm just some guy on the internet. Always do your own due diligence, okay? Promise me that if you're okay with that, and if you're enjoying this video so far, give it a thumbs up. It really, really helps my channel to show this video to more people, because I put a ton of work into these videos. But with that out of the way, let's look at what I think a fair price should be for Altria stock. So first of all, taking the average dividend yield that it's had over the last few years, and also taking into consideration the ridiculously good dividend yield that it has at the moment, we can actually calculate at what price this stock would go back to that dividend yield that it has had over the last 5 years. And that price comes up to around $49 per share. Next, I want to have a look at two other methods of analyzing the price of this stock. The first one is what analysts are saying, okay? Wall Street analysts, what do they reckon a fair price for Altria should be? And at the moment, according to 8 analysts, the fair price is around $50, so very similar to the yield calculation. Then finally, let's use the dividend discount model. This is my personal favorite because you can actually tweak the numbers a little bit and tell it what expected dividend growth rate you're expecting from that stock, and also what expected rate of return you want from that stock. So I normally put that at 10%. Because that is the rate of annual return that I personally look for. And then if we actually put in the average dividend growth rate that Altria has had, which has been around a 9% over the last 20 years, that gives you a ridiculous result. I don't think that Altria is going to keep increasing its dividends by 9% a year. They might do. I mean, their earnings per share are growing, the dividends are also growing. They might very well actually increase the dividends by that much. But this is where you want to input some sort of margin of safety. So I'm going to be really cautious here. I'm going to say 5% dividend growth rate over the very long term, which I think is very manageable. I think Altria, especially with its acquisitions, should be able to maintain that dividend growth rate going forward. Again, this is my opinion, but even with that level of dividend growth at 5%, the fair price comes up to $71 per share. Now, if we compare that to the current stock price that Altria has at the moment, it is less than $40 per share. You can see that over the last 5 years, the stock price has gone down from around $75 per share all the way down to below $40 per share. So in terms of price, if you believe in Altria, if you believe in the long-term prospects of Altria stock, this could be a pretty good time to start a position in Altria. Now let's talk about what kind of return you could expect if you decided to invest in Altria stock. At the end of the day, return is the only thing that should really matter to you as an investor. You want to make your money grow. Therefore, the rate of return is really important to know and to be able to kind of predict. Now, as a rule of thumb, to be able to really quickly calculate your expected rate of return, if you just add up your dividend yield and the expected earnings per share growth of that stock, if you sum those two together, that gives you your annual rate of return. You could also add your price to earnings ratio differential, how far away from its average price to earnings ratio that stock is. But in the case of Altria, and assuming that they keep increasing that dividend, assuming they don't cut the dividend, I don't personally see any danger in them cutting their dividend, considering that they are a dividend king. They've worked very hard to be at that point, and the nature of their products is not really that conducive to them having to cut their dividend because of some years with some really bad earnings. So I'm just going to go with an 8.4 dividend yield, and then let's be extra cautious and assume that they will be able to increase their earnings by 3% every year. If we add those two together, we get an 11.4% per year, which I think might actually be extra cautious. You can probably get a significantly higher rate of return than that when you invest in Altria stock, but I don't want to be too over the top. Still, an 11% rate of return is spectacular. It's really hot. It's really hot in Spain in the summer, guys, by the way, in case you didn't know that already. Okay, so my thoughts. I am a shareholder of Altria stock. I bought it first, I believe, in 2018. And, I'm really enjoying that dividend. I don't have as high a dividend yield or yield on cost as what it is now, because I did pay significantly more than how much you can get it for at the moment. But personally, I'm a little bit torn in recommending this company. There's definitely some very strong pros, but also some negatives that I don't super love. First, the strong points. As an investor, that's what you should really care of, right? They are a very profitable company. They are really good at having high margins. They have a really good return on equity. Those things are very important for businesses. And in the case of Altria, it is one of the highest that I've seen. They're really, really profitable. Also, their products, they're mostly tobacco. People are addicted to tobacco, and that is a negative, and I'll get into that in a second. But because people are addicted, they will keep buying it. And that means that the staying power of its brands and the products are really strong. So what that probably means is that in the long run, they will probably keep making significantly big amounts of money for a very long period of time, especially if their new acquisitions do well. That's also something that I like. The company seems to understand that, tobacco is not forever. They cannot rely on tobacco, at least as the only way of making money, and they're expanding. Obviously, the caveat here is that in order to acquire businesses or stakes in businesses, they have had to fund those acquisitions by taking out a lot of debt. Which brings me to the negatives of Altria stock, the things that I don't like very much. Firstly, it's that level of debt. I don't like companies that have too much debt, and even though the CEO or the company's management say that they are targeting that level of debt or they're targeting a certain payout ratio, okay, I think the payout ratio is too high, in my opinion, and also the level of debt is too high. Those are definitely things to consider before you invest in this stock. Also, there's a question of morality. Is it moral to sell cigarettes? Is it moral to invest in a company that sells cigarettes that at the end of the day kills people? Okay, let's be very blunt about this. Cigarettes are not good for health. Tobacco is not good for health. And this is something that I did think about, when I started investing. I wanted to be a moral investor. But then I thought, you know what, if I invest in the S&P 500 or in a big index fund, I'm still investing in companies that aren't necessarily moral. Alcohol, cigarettes, defense, okay, all of those things are not necessarily that moral, but they form part of society. They form part of the wider economy and the wider global economy. Therefore, over the last few years, I have definitely taken a more pragmatic approach to the morals of investing. And especially with a company like Altria, where you're getting such a great dividend, such an amazing dividend history, and the company seems to be getting more profitable over time. And like I said at the start of the video, that combination of dividend history, dividend yield, and growth in both earnings and dividends, you don't see that very often. There's only a handful of companies that have this combination, and yeah, Altria is definitely one of them. So in my opinion, it's a great stock to own. Again, this is not a recommendation to buy, but I personally do like it. So this was the very first in the series of Dividend Kings. I would love to know your thoughts, guys. Have you enjoyed this video? Let me know in the comments below. Also, let me know if you actually own Altria and what you think about Altria and whether you prefer it to Philip Morris or other tobacco stocks. Thank you guys for watching this video. I'm now very close to reaching 1,000 subscribers here on YouTube. So a big thank you for all the support that I'm getting from you guys. It really makes making these videos worth it, honestly. I do actually really enjoy making these videos. And the only thing that I ask in return is to give this video a like, to subscribe to my channel, and just to share this video with anyone who would benefit from, this free investing information. That is it, guys, for this video. Make sure to subscribe to my channel. Make sure to watch the Dividend Kings playlist, because I'm going to be going through every single one of the 28 Dividend Kings. This was the very first one that I've made. Yeah, guys, thank you for watching. I hope you have a great day, and I'll see you in the next video, okay? Take care. Bye.